When the FT opened for business in 1888, London was the world's preeminent financial center.
125 years on, Mark Carney, Bank of England Governor, believes the UK still belongs on the global financial stage. To keep it that way, Mr Carney on Thursday night broke with the tradition set by his predecessor and announced a sweeping overhaul to make it easier for troubled lenders to get hold of central bank cash. The FT talked to three people at the event: Michael Saunders, UK economist at Citigroup, Tidjane Thiam, CEO of Prudential, and Andrew Formica, head of Henderson Global Investors.
I'm going to use more than 5 words to describe our approach in a moment, but I'm going to use 5 right now, 5 simple words to describe our approach, which is that we are open for business. The new Bank of England facilities are not ornamental, they're there to be used.
I think that probably won't be needed much in the immediate future, because after all, we don't have a crisis right now. But it's good to get these kind of backstops in place rather than to try to make them up on the hoof if and when a crisis comes. You can argue they should have had this in 5 or 6 years ago, but I think this will help reduce risks if we were to get a further crisis in the future.
The Governor's desire to keep finance in the UK was unequivocal. The business leaders in the audience appreciated his message.
The UK's financial sector can be both a global good and a national asset, and it will be if it's resilient. The bank's task, the Bank of England's task, is to ensure that the UK can host a large and expanding financial sector in a way that promotes domestic financial stability.
I think what he's saying is, which is different to his predecessor, is that the UK can have a strong global banking network, but it has to be adequately regulated and capitalised. And obviously there's a strong commitment to make sure that that's infrastructure's in place, but with that the UK is open for business in that regard, which I think is a very different message, which certainly I think is very important for the UK.
We have no issue with London. I've actually said we love London. It's a great place to be. I've been living here for more than 10 years very happily. There's a lot of skill here. It's a very convenient place to be.
In conversation with the FT's editor, Lionel Barber, Carney made it clear that it wasn't so much bank size, but how stable they were that mattered.
Now, whether or not UK institutions maintain market share increase, market share is up to them. What we have to do is organize the system in a way that is ensures domestic stability.
He emphasized the importance of the financial services sector for the UK economy. I think that's an important message that we're always pleased to hear, because we believe we play a significant role in job creation and growth for the UK economy. And he fundamentally said, he had a message that was slightly different from things we've heard before. He didn't say big is bad. He said that if you're safe and stable, you're fine. You can actually be big. And that was, I think, a welcome message.
The Governor was dismissive of accusations that the bank was holding back growth through tougher rules on lenders. It was not, as Business Secretary Vince Cable has claimed, a capital Taliban.
Some politicians in this country have identified what they see as a trade-off between greater stability, brackets, more capital, and growth, that is, more leverage. Now, do you accept that trade-off?
Unless financial institutions are adequately capitalized, they don't go out and search new business. They're looking over their shoulder. They become fundamentally risk averse. One of the reasons to think there could be some sustainability, some traction in the recovery, is that the core of the financial system here has gotten a lot better. I won't say it's fully healed, but gotten a lot better, and the rebuilding of capital is a big element of that.
The recapitalisation of banks and the deleveraging that we've seen is pretty much at an end. Which is, again, interesting to hear from his perspective, that what we're seeing in terms of the pickup in the economy is driven by the fact that the banks are now lending and that companies are now looking to borrow and invest. And I think it's just that we've got to remember we're 5 years through from the beginning of the crisis, and people are now starting to look forward rather than through the rear view mirror.
Thank you very much.
With 1 million jobs in financial services and 2/3 outside London, it was clear from Mr Carney's comments on Thursday night that he believes the industry has a key role to play in returning Britain's economy to full health. Claire Jones, Financial Times, London.